Hi, I'm Ryan Firth, founder and president of Mercer Street Personal Financial Services. In this screencast, I will walk you through an example financial plan. The financial plan our firm creates for you is based on information you share with us during our introductory meeting, as well as information you securely send to us after the meeting, such as your most recently filed tax return, brokerage statements, insurance policies, etc. Your personalized plan will be tailored for you based on your specific financial goals and objectives. When the plan is completed, we then meet to go over it together in its entirety. So, in the interest of time for this presentation, I'm going to highlight several sections of the example plan instead of covering every section and bullet point. So, let's go over the plan now. As background, this plan was created for a family, a husband and wife, with two preschool aged children. The wife works as a hospital administrator and the husband is a physician. The first section we have is the goal setting. So during our introductory meeting, it became apparent that this family had three priorities they wanted to address through the financial planning process. Education savings for their two children, investing in an ambulatory surgery center, and purchasing a home. At the time the plan was written, they were just renting a house. At Mercer Street, we like to use life planning exercises such as George Hitner's 3 questions during the introductory meeting to assist clients in identifying their financial life goals. Next section is cash flow management. So in order to accomplish your goals, it's good to know kind of what your spending patterns and income look like. So we like to have clients track their cash flows using their preferred tool or method. If you're not currently tracking your cash flows, we can recommend some tools and methods that might work best for you. With respect to the emergency funds, we usually recommend you have at least 3 months or more of cash on hand to cover your living expenses. The amount of coverage is really contingent on the stability of your income. So if you have a steady job, you don't potentially need as many months of coverage. If your income's more unstable, then you probably want, a bigger cushion or reserve there. For this point, the couple is a typical one that they don't have any major outstanding debts. So this wasn't something that was addressed in this particular plan, but that's definitely not the norm. So just wanted to point that out. Next section is estate planning. So nobody likes to talk about their own mortality, but this is really one of the most important areas to address through the process of financial planning. You should have documents in place such as a will, durable power of attorney, medical power of attorney, advance directives, and if applicable, guardian designations for your minor children. Hopefully you won't need the documents for a long time, but it's good peace of mind to have them in place. It helps to ease the burden on loved ones during their time of mourning. We can help you find a qualified estate planning attorney if you don't already have one in mind. If you already have documents in place, they should be reviewed every few years, or as important life events occur, such as marriage, birth of a child, or divorce, really to ensure that they still accurately reflect your wishes. And then one other thing to point out, it's important that beneficiary designations, so what's listed in your brokerage accounts, are titled the way you want because they take precedence over whatever your will or any codicil indicates. So when assets go through the probate process, they're going to follow these beneficiary designation forms as opposed to what's in the will. So again, just something to bear in mind. Next section is risk management. So in the context of personal financial planning, risk management is a term we use to describe insurance coverage like life, disability, property and casualty. Umbrella property and casualty insurance policy is usually an inexpensive way of obtaining additional coverage on your property. If you're a young professional raising a family or a small business owner, you should have some form of life and disability insurance coverage, whether it's employer provided or privately purchased. If you engage us to work with you on this part of your financial plan, we can evaluate the adequacy of your coverage to make sure that you're not underinsured. The next section is credit and identity protection. So by now it shouldn't be a surprise if a bad actor has your personally identifiable information. This is also known as PII. There have just been so many security breaches at various companies that have your PII. So recommend you review your credit scores annually. You can pay for credit monitoring, but at Mercer Street, we believe that the best protective measure is to put a credit freeze on your accounts at the credit reporting agencies. So this prevents someone from opening a line of credit without you knowing it. And with your customized financial plan, we give you hyperlinks to the 4 major credit reporting agencies, so you can easily put those freezes on your accounts if you want to go that route. So this section, employee benefits. This is an area where many small business owners are at a disadvantage compared to larger companies, unfortunately. If you're self-employed, we can help you identify plans that meet your needs. If your employer offers these employee benefits, we can help you identify a plan that's right for you. At Mercer Street, we're huge proponents of HSAs. These are also called health savings accounts. They're vehicles that are highly tax advantaged. If your employer does not work with an HSA administrator, we can point you in the right direction. And then another note about HSAs, you have to be enrolled in a qualified high deductible health plan in order to contribute funds to an HSA. And then this isn't in the plan, but just a cool tax savings trick is that with employee benefits, if they're taken directly from your paycheck, benefits usually aren't subject to Social Security or Medicare taxes. These are called FICA taxes. So again, not everybody has access to, they're called 125 plans, cafeteria plans. But if your company takes the taxes directly from the benefits are paid directly through your W-2 wages, you get that whole tax savings. So just something to point out. So the next section is financial freedom. So whether you want to call it retirement, work optional, financial independence, or financial freedom, which I've done here, this is usually the most important financial commitment that prospective clients want to get a handle on when they come visit us. So everyone has a different idea of what financial freedom means to them. So when meeting with new clients, we like to do some exercises where clients figuratively paint a picture of what it looks like to them. What does financial freedom mean to them? So we work together to tie those goals to your finances and devise strategies that can help you achieve your own unique personal vision of financial freedom. Next section is college and private school savings. So this family wanted their 2 preschool-age children to attend a private elementary school. If they plan to pay for their children's primary education using the funds they had in they had a 529 plan, tax advantage plan. Wasn't sure if they were going to use that money to pay for the private school, but if that was the case, then we would have looked at the investment holdings to make sure that they were invested appropriately. So in something that's a little more conservative and not likely to be subject to market volatility, the ups and downs of the market. So and then another suggestion I had for them was to look into setting up a Coverdell education savings account. So it's another tax advantaged savings vehicle that's similar to a 529 plan. And there are some slight differences between the two, but that's beyond the scope of this presentation. So, and then investments. So our approach at Mercer Street is we believe in asset diversification, keeping costs low, and minimizing the impact of taxes. So one of the best ways to accomplish all 3 of these things is investing in passively managed exchange-traded funds. These are also called ETFs. So we're big believers in keeping things really simple whenever possible so that you can really self-manage your investments, because investing shouldn't be, really quite truthfully, isn't all that complicated. Next section is taxes. So definitely an area that we know well. Tax planning really touches, all aspects of financial planning. It's really important. So in this plan, the husband, he had substantial realized losses that he had recognized in the prior year. He sold some investments for a loss, and basically, had he offset those losses against some unrealized gains he had in his investment portfolio, he could have saved quite a bit of money on his taxes. Unfortunately, he wasn't as very proactive about the tax planning. So incredibly, the potential loss deduction was so great that it could have paid for this financial plan several times over. It was really, really incredible. So really the point is taxes can take a big bite out of your income. So we do our best to identify and implement strategies that will hopefully minimize your taxes as much as legally possible so that you can keep your hard-earned money and not the US government. So that's everything I wanted to highlight in this plan. I hope you got some useful ideas that you can apply to your own financial life. And that's about it. Once again, this has been Ryan Firth at Mercer Street Personal Financial Services. Thanks for watching the video.